everybody. Let's get going here. My name is Tad Stevens. I'm director here at CPEthink.com. And this morning we have Jeff Cheney and Martin Hanson that are going to present Deal Making 101, Introductory Guide to Assisting with a Business Sale or Acquisition. Before we get started, though, I want to take care of a few housekeeping items. We are recording this, and this will be end up being a self-study course in about a week. There is no final exam technically with this, but to get your certificate of completion, you do have to answer a one-question final exam attesting that you did attend the webinar. That forces our system to generate your certificate. You will see that final exam pop up on your My Courses page in CPE Think 15 to 30 minutes after the webinar. It takes it a little bit of time for our system to pull the attendance data down from Zoom and update on our side. But within 30 minutes, you will see the Take Exam link on your My Courses page. Just click that, answer the one question true that you did attend, click Grade, and your certificate will be generated. We are going to ask 3 polling questions during the webinar. Those are not graded. Those are just so NASBA will be happy that you are in attendance and you are attentive. So please do answer those quickly so we can keep going. If you have any questions during the webinar, I'll be monitoring the chat while Jeff and Martin are presenting. And if there's anything I can't answer, they will get on it and get it answered for you. If there's any questions you come up with after the webinar, please feel free to either email us at service@cpethink.com, and I'll put a link in the chat shortly, or just click the maroon chat bubble on any page on our website, and we'll get right back to you with an answer. So that being said, Jeff and Martin, are you guys ready?
We are ready. We're ready.
All right, super. I'm going to turn it over to you. Take off, and let's get going.
All right. Well, thank you very much. This is a real honor and pleasure to be here with everybody. Tad, thank you for setting this up. Let's get into our learning objectives. So upon completion of this course, everybody who's attending and listening to the recording in the future should be able to describe in detail why more than 70% of business transactions fail and what can be done to reduce that amount. Describe how many businesses are for sale at any given time, how to find them, and how to approach them. And then describe in detail the 6 steps necessary to assist in the sale of a small to medium-sized business. All right, so next, let me introduce the gentleman sitting to my left, Mr. Martin Hanson. He is the creator of Dealmaker 360. Martin is a 25-year transaction industry veteran. Specializing in the lower to middle markets. He has literally closed hundreds of transactions in his career and over $2 billion in enterprise value for his clients. So Martin, you want to say hello to everybody?
Good morning.
All right, and I'll also introduce myself, Jeff Cheney, Relentless Management Group Partner. I am a technology startup expert and senior project manager for Dealmaker 360. I have literally consulted with hundreds of technology companies around the nation and just recently completed multiple different acquisitions. All right, enough about me. Let's move on to our overview. So here's the reality. Selling a business is one of the most stressful transactions an owner will ever complete. In the next 50 minutes or so, we're going to do as best we can to keep it within 50 minutes. We're going to show you guys and gals how the transactional process, or how you can assist in the transactional process, and how you actually have the tools available to you already today to participate in that. All right, Martin, let's start off with terminology. I want to essentially focus on, or there's going to be a number of things that we say throughout the next 50 minutes. And I want to make sure that everybody on this webinar understands what we mean when we use certain words. Sometimes there's a double meaning in something, and I just want to make sure our terminology is consistent and that everybody's on the same page. So first, let's talk about a deal or a transaction. Martin, what do we mean when we talk about a deal?
Well, again, it states here that, it's where two parties are, or even more at times, for their mutual benefit, can be contemplating a transaction between either, again, those two parties or multiple parties, with the end goal to move the assets of a company or a small business to another. Quite simple.
Just switching ownership. So when we say transaction, we are referring to the transaction taking place between a business owner and a buyer and them switching ownership.
Yeah, and again, a lot of people use the word deal. Some people use transaction. So we just want to make sure it's crystal clear they are the same.
Okay. And then what is, or who is, a deal maker?
Well, usually in the deal process, there's four components. You have what they call business development, which is sourcing transactions, going out and finding deals. You have the underwriting portion, which is typically an analyst. They underwrite the deal, which means they put together the package of information. A lot of times those underwriters are CPAs. Number three, you would have what we call a sell side or buy side analyst, which is out soliciting buyers and or sellers actively. And then you have somebody called a deal maker, which is a person that takes those three individuals that are working with them in a team, and they all together, the deal maker is the person that actually constructs and conducts the transaction. However, that process in itself is getting tired and old. What's happening now is, due to technology, the deal maker, whoever that may be, is now performing many of those tasks themselves. So it's really changing due to technology. Let me just skip forward. The broker, which is the next item there, is typically a licensed professional. They are many times real estate professionals that are, focused on business sales, and they're paid usually a success fee or a commission, and it ranges anywhere from, on a low side, 8% and sometimes as high as 15%, but the average is about 10% of the gross consideration of the transaction. APA and SPA, those two words, all the CPAs out there know exactly what those are. Fundamentally, the small business sale is typically an APA. They usually sell the assets for all the reasons that many of the CPAs online know. Stock purchase agreement can be favorable on some transactions, and it's done a lot more often than people may think. And the difference between the two is, one is you're selling the actual assets, and the other is you're selling the stock that actually controls the assets.
So just to clarify there, Martin, the SPA is only relevant really to a corporation that has stock. And when you do an SPA, you are essentially buying the entire identity of the company.
That's correct.
The EIN number would stay the same. The bank accounts would basically stay intact, or could. Whereas an APA, and you have a sole proprietorship or an LLC or some other form of entity, since there is no stock available to acquire, it has to be an asset purchase.
Well, that's correct to a certain extent. Yeah, the LLCs, of course, they have membership units, so that's a different subject. But yes, the sole proprietors, general partnerships, that's always going to be an APA, or it can be an asset purchase. And as far as the stock purchase, yes, you assume the identity, but a lot of times there's something called reps and warranties in the SPA agreement that is going to be very strict, and so the buyer is protected to a certain extent, depending on those reps and warranties.
Gotcha.
All right, so M&A is merger and acquisition. I mean, I'm a M&A specialist, so that's what I do. I merge and or I acquire companies for third parties. M&A is a term that kind of became real popular in the late 60s and early 70s, but pretty much everybody knows that. LOI, just a letter of intent. That can be in many different forms, but typically it's called a letter of intent. It can be a letter of interest. It can be an MOU, a memo of understanding. It can be a term sheet, lots of different terms, but primarily LOI is the term that's used regularly.
And there are binding LOIs and there are non-binding LOIs. What's more common in the mergers and acquisitions space?
Typically, it's going to be, or generally speaking, I should say, it's going to be a non-binding LOI for lots of reasons that we don't have time to discuss today. But the last is the term sheet I had mentioned, and a lot of people get the LOI and a term sheet confused. LOIs can range from 2 pages to 10 pages. Term sheets are typically 1 page, 2 page at the very longest, but typically it's just a 1 page snapshot of the general terms and conditions of the deal without any explanations. It's pretty simple and straightforward. I've always liked term sheets best because term sheets, you can get them completed. You can get them to the buyer and or the seller, depending on who's on the other side. You get them to agree to that after a little negotiations. Then that term sheet, once it's signed and executed and dated, it goes to the transactional attorneys and they're able to work from that document versus the elongated process typically you have to go through with an LOI. So I like term sheets, but that's just a personal opinion.
Nice, nice. I just want to point out that if you want a more comprehensive list of terminology used in the space, in the industry, you can visit dealmaker360.com/resources. And I see I have a little typo here. This is the first one I've caught. So dealmaker360.com/resources where you can find a more comprehensive list. All right, so let's talk about the process involved in deal making. And we've got, I'm sure a lot of people speculate that it's probably very, very different, one business to another or large business to a small business. But Martin, it's basically the same, isn't it?
The process itself is the same. It's just what changes is the zeros and the size of the company. If you're merging T-Mobile with Verizon, they have thousands of locations. They have obviously lots of infrastructure and lots of assets. A team of people, whether it's from Goldman or one of the other major investment banks, would have to be dispatched and mobilized to go out and count and eyeball and review and look over all of these different respective assets. On a small business, especially if it's a single location, it's considerably different. However, what's important to note is it's really just the number of zeros and it's the size of the team and the complexity, of course. So as far as the process though goes and the steps that we're going to talk about later in the webinar, it's the same. I've done transactions that had, a lot of zeros, and I've done transactions that had a few zeros, and the process itself is the same. You might expedite through one of the stages of the process because you already have the buyer or the package of due diligence is already complete. However, you still have to go through that step in order to get to the next step.
Right. And as we'll talk about in a little while, there's really just 6 fundamental steps to the process. It's a pretty systematized, the steps are very systematized and kind of orderly.
Yes, with the exception, there's nuances within each step, but yes, there's 6 steps.
All right. I love it. All right. So Martin, now I'm really going to tap into your brain. You've been doing this for years. And working with the small to medium-sized business sector, along with also some very large-scale deals. But what we want to focus on today is really the low-hanging fruit, the small to medium-sized businesses, and what you have come to understand about the need in the industry.
Technology has changed everything. And when we used to practice back in the 90s, it was wet signatures is a great example. And laws were passed that allowed us to accept fax and or scanned copies now. So when I had a staff of 12 people back then, I have a staff of 4 now. It's changed dramatically. And everybody that is working now in the M&A space or the small business sales space is working hard, but they're not having to have a lot of support staff and ancillary assets to conduct business. So the industry has changed. Therefore, what happens is the SMBs don't realize that they can actually, with the technology available now, they can sell their own business.
They can do it themselves.
Do it themselves with some assistance, of course, from some professionals. But primarily, yes, it's not like it used to be where they walk into your office and throw a bunch of stuff on your desk and say, look, I got to sell my company. I've got cancer and I need to move on. Mm-hmm. It's not like that anymore because of technology. So I think that it has changed drastically.
So it's changed, but the small business, the average small business owner doesn't realize that it's changed because they may have never participated in a transaction before. They could be 40 years into a business, a furniture company that they started, back in the 70s or 80s, and they don't know what's happening in the industry. And if they want to transition out, whether it be retirement or sickness or the competitors coming in, they don't know what that process really looks like, and that they have tools available online that make it very easy in many respects.
Well, later in the slide presentation, you're going to find that thousands and thousands of baby boomers are retiring every day. And what's important here to note is a lot of those baby boomers, as a lot of the CPAs on this webinar know, they're small business owners. And you're right. That's a very, very important point. They don't know that there's resources out there, and they don't know that they can do that themselves.
So that leads into our next point, which is
right.
that they don't know how. I mean, so there's if you wanted to sell your business today, if you own that furniture shop and you thought to yourself, I'm done. I am done. I want out of this. What do I do? How do I do it?
Yeah, whether it's a service business, it's retail, it's manufacturing, it's mining, it's IT, it's I've actually conducted transactions in all those spaces, and the process, as we said earlier, is the same, and they need to understand the tools are out there, and that's why we want to get to CPAs and let them know that the tools are out there for them to be able to perform with their client.
And that's because they're going to, the small business owner, when they're asking the question of how, they're going to turn to a professional that they trust. They're going to turn to somebody, an advisor, and say, look, this is where I'm at in my life, and I'm ready to make this transition. How do I get started? What is the process?
Well, again, as we stated in the next item, small business owners are, again, generally speaking, they're intimidated by the due diligence and the disclosure process. CPAs are uniquely qualified to help them through that, as well as some of the other important components of a sale. And what happens is they look at that part and then they just say, look, it's probably just easier for us to liquidate this business, or maybe it's even easier to just sell this thing for whatever I get an offer.
And by easier, I mean, we're talking about like emotionally easier. I mean, when it comes down to that decision to sell your business, you're making a decision to literally disclose your financials to a complete stranger and kind of bear everything out there to the public, so to speak. And it's a very intimidating process. It's one that a lot of people don't like the feeling of, the idea of being that transparent. And so when they come in and they're faced with the due diligence process, having somebody in their corner who already understands their financials and has some insight into the business structure and how things are packaged can really help assist them through that emotional process, that decision-making process at the beginning.
Well, as it relates to the intimidation, yes. I mean, if you look at a confidentiality agreement, a small business owner, I cannot tell you how many times a small business professional has come into my office and they run a company, whether it's a service business or retail, and they've done very, very well. I'm talking, $10, $15 million in revenue and generating, $2, $3 million of EBITDA. They walk in and they drop all of their confidential information on my desk and say, hey, Martin, I need you to look this over and tell me what you think. And the first thing I do is push that away and say, look, let's get a confidentiality agreement signed if you want me to eyeball this. It's not complicated. It's just that they don't understand the process. And what we're trying to accomplish, I think, in this webinar is to let the professionals out there, the CPAs who are, again, most often the most trusted advisor to the small business owner, look, help your clients with this process because you can do that. And confidentiality agreements, yes, is it a legal agreement? Yes. Do you want it drafted by a lawyer? No question. However, a CA, better known as a CA, or the acronym, is a CA. It just, you can find them everywhere. They're not complicated documents. You just got to look and make sure that you're comfortable with that document. Maybe you get one that you're comfortable with from your lawyer, and make sure that that's signed so your client can disclose to you and others what information they have and what ultimately they're going to need to find and get and prepare in order to prepare that company for sale.
And I think that's a great example of how you can help them be kind of rest assured. When you say, hey, look, we can secure everything. We can make it so your confidential information is bound by contract that nobody's going to share that information. And just that alone helps them, kind of breathe a little bit of a sigh of relief and just go, okay, good. I'm glad I have somebody in my corner helping me through this, advising me, telling me which documents I need and when, because it's the unknown that's most intimidating.
Yes. And again, CPAs are talking to attorneys quite a few times in their annual processes of tax returns and financial statements and such. So this is not a large leap to move from what they already do to assisting their clients with that sale. And then as far as hiring a typical M&A specialist and or a business broker and or a business consultant or advisor to help with a sale of an SMB, it is expensive. There's no question about it. Again, the larger the deal, the smaller their percentage from a fee perspective. But a lot of M&A specialists, myself included, we charge fees up front. Sometimes we even charge monthly fees, and then we charge either a flat fee and or a percentage depending on the type of transaction. And so, yes, it can be expensive, but most SMBs, especially ones of size, they feel it's a very worthy investment. However, there's more work than there are specialists, especially ones that understand the transactional process and have actually closed transactions in the past. So SMBs many times can not only not afford to go to a traditional M&A specialist, as you articulated there on your slide, but more importantly, it's hard to find one that's experienced and trained and knowledgeable.
Right. So there had to be a better way to serve. I mean, the SMB space is a massive market and it's massively underserved. And it's because of a lot of the unknowns and because the small business owners have never dealt with or rarely deal with these types of transactions. And because of the intimidation, they may choose to just liquidate their assets and just go in a different direction, shut the business down and lose a tremendous amount of value in the company that they just give up on because they don't know where to start. They don't know who to turn to. They don't know what the process is. They're intimidated by due diligence and they don't think they can afford it. So that's what we're facing. That's the underserved market opportunity that we're talking about here. So a good example of that is that businesses with fewer than 20 workers make up 90% of the U.S. business. That is just a staggering number. I mean, there are big companies out there, but they represent a very small percentage of the actual number of businesses in the U.S. 90% of companies in the U.S. have fewer than 20 business owners.
I mean, they clearly represent the largest group of businesses. There's no question about that. And what I think is more important with that factoid is that SMBs are always engaged with their CPAs from a tax perspective. And some financial statements and other counsel advisory, including financial services and maybe some other ancillary services over and above that. But very few are engaged with the actual process of selling their business, other than, hey, I need these financial statements that you have, and or, hey, I need last 3 years of tax returns. Mm-hmm. CPAs are, again, as I said earlier, are very uniquely qualified to assist the small business owner with the sale of their business.
Fascinating. So here's some more statistics for you. I pulled this data from the SBA.gov. In the third quarter alone of 2016, 240,000 new businesses were started. Now that sounds like a staggering number. It really is a staggering number, and it's very impressive, and it's gone up in recent years. But here's the other side of the coin. During that exact same period, that same quarter of 2016, there was 215,000 establishments exited. So
right, and what's interesting about that number is back in the 60s, the transactional flow was somewhere hovering around 5 to 7% of all small businesses were for sale. Now it's closer to 15, and quite possibly it could be higher than that, which means that 15% of every SMB out there is for sale or interested in selling. And then there's another chunk of that, as you say in your slide, that would sell if the price was right. What's changed is you have a lot of older owners, baby boomers, and then capsulized behind that is a lot of younger entrepreneurial people that have started up companies, and they want to not, I hate using this term, but they want to own it for 3, 4, 5 years, and they want to flip it. They want to sell it. It's a yogurt shop. It's a liquor store. It's a small service company.
A technology company, software.
Yes. Yep. And so those are converging, and therefore that's why the percentage is increasing so greatly. So that 215,000 businesses in just one quarter, there's a massive underserved market right there for counsel and advice.
And that's where we mentioned kind of that opportunity is that some of these businesses are choosing to exit without ever even shopping their business for sale. They just liquidate assets and close the doors, all because of the unknown and those steps that we just talked about.
Right, and frankly, every time that happens, whether it's a CPA or it's another professional, it could be an attorney, it could be, again, any other professional that's providing services for that SMB loses a client.
Sure, absolutely.
I have many colleagues and friends that are business brokers, and they're licensed depending on the state. And they go through a lot of training to get their certificates in the process of selling and buying companies or businesses for third parties. And certainly that in no way, shape, or form means to discourage them that they're not represented from a licensing perspective. Indeed, they are. I think what is important to understand is there's a difference between brokering a transaction that has pieces of real property involved and or actually advising a client on the process in which they can sell a company or a business. And it's very much in the wheelhouse of a CPA and or a business advisor to provide that counsel, because that's what it is. We're not asking them to do legal documents. We're not asking them to broker real property. We're simply saying provide the same advisory services that you're providing as it relates to tax, audit, and other matters that CPAs do on a daily basis. So I want to make sure that that's clear because there's a lot of really solid business brokers out there and other professionals that are licensed that provide counsel related to small business sales, and they do a very good job. But we believe there is a massively underserved market for the advice and counsel on the process and the steps and guiding that small business owner through those.
I love that. And I mean, that interprets into revenue opportunities for these firms. So how can you help? I mean, I've had this screen up for a second, so many of you have probably already read it, but most transactions require professional assistance. There's really, I mean, I hate to say no way around that, but really every transaction, even down to the smallest, should have, for example, some legal oversight and a professional looking over the documentation and ensuring that both parties are protected at a minimum, right?
Yeah, I mean, we got to understand that the 20th century is completely different than 21st century. I mean, where many small business owners, back 20 years ago, 30 years ago, they never even talked with an attorney. And many CPAs, they only went to a CPA if they needed a tax return done. And so it has changed drastically. CPAs are becoming business advisors to companies and assisting with advisory on a daily basis, which I think is extremely important. But yes, proactively contacting your clients and letting them know that you can walk them through the process of selling their business. It's very simple and straightforward. We're going to help with that. And then as far as the necessary steps, they're, again, very simple, straightforward. There's, of course, nuances here and there, but if you follow the steps and make sure that your client is aware of those steps and they assist you with putting together the information, making sure that everything is documented and whatever isn't, get it documented, and then making sure that you assist as they find buyers and work through that process.
We're going to talk about the reasons why deals fail in a couple of minutes here, which is a really interesting topic. But that's where, having a professional who understands the process and the steps plays such an important role. You may not be the broker, you may not be the lawyer, but you can be the person who participates and literally walks them through these steps and ensures that things are just going right, and providing them with the guidance and the reassurance that they're going down the right path and that they're not going to fail. They're not going to do something wrong that causes the deal to implode.
Jeff, let me make this statement. I'm a lot of things. One of them is in the CPA or an accountant. And I can tell you, if I can do the process, a CPA can do the process, and a CPA could probably do a better job. Okay. If my recollection serves me correctly, I think I got a B in accounting. Okay. So yes, there's no question that this process can be managed and controlled to a great extent by the CPA. And by the way, an attorney can't do that. Typically, they have a tight jacket on them as it relates to transaction, what they can do with their law license. And in business brokers, we've already discussed. So I think CPAs are, again, uniquely qualified to step in and assist.
So speaking of that, I mean, Eric Hansen, chairman of the AI CPA, stated that we realize the industry must look to provide more value to help offset the do-it-yourself competition that's emerging. I mean, more and more people are turning to the internet, especially this next generation. They're not so much going to a CPA than transitioning online as they are starting online. So many businesses now today are going straight to online resources to handle their financials.
Well, first and foremost, there's no relation, although I like the way he spells his last name. As far as his statement, I think it speaks for itself. Eric is an extraordinarily gifted CPA, runs a very large firm, is very well respected. And I think what he says there in a very snappy, short quote is exactly what needs to be considered. DIY is out there, and advisory opportunities are out there, and the CPAs have to make a choice, a conscious choice as to, are we going to step in that space? Yeah, I agree. Tax and audit will always be there, regardless of the changes in the laws. I believe it will always be there, and that's a solid piece of business. I just believe that this is a very large piece of business the CPA should be considering, and for all the right reasons. They can help their client.
Love it. So we touched on the internet and the impact that it has, and then we have, clients have more access to online resources than ever before, and we're seeing the dependency start to change. We're seeing a shift occur.
Yes, I mean, again, the CPA, as you say, is disrupted a lot of things, including but not limited to the transactional space. There's tools out there that people can grab, use, and assist their clients, and at the same time build their hourly rate and make money. There's a lot of resources online right now that clients can go to. And I believe that because the transactional space has some nuances that require professionals to look at and understand, and then apply their knowledge to their clients' questions and or concerns, again, fits very well with the CPA. And I believe as far as revenue opportunities, that they're massive. The opportunity to sit with a client and share with them the process and walking them through the process alone is significant. And so I really believe that, yeah, again, tax and audit are important, but I don't think in the future that will support the firm's growth as they have in the past. Therefore, looking for services such as the transactional space is important. And,
great way of increasing value to a client and also increasing revenue for the firm.
No question.
All right, some other things to consider here is that $35 billion was spent on transactional expenses alone annually. Can you kind of interpret that for me?
Well, let's just be honest. I mean, there's a lot of industries that don't even generate $35 billion in revenue, let alone these are ancillary, tertiary expenses and have nothing to do with the actual transactional value. I'm talking about this is all of the professionals involved and the third parties involved as it relates to transactions.
So advertising expenses.
Yeah, everything. Advertising, legal, accounting, audit, obviously transitional expenses, and escrows, real property transactions. All of those are wrapped up into that number, but that is a massive number. There is a huge opportunity.
And I think you already mentioned that the thousands of baby boomers retiring every day is really what's generating so much of the influx of new opportunities in the market.
Well, that number says a lot. That's a lot of people, and a lot of those 10,000 baby boomers that are retiring every day have small businesses.
So here's another one. I mean, you mentioned that some of the expenses involved in selling a business, typically a lot of the expense or some of the expense is in the advertising and marketing, the promotion of the business for sale. BizBuySell.com, the internet's largest business for sale marketplace, and there's a lot of them out there, but BizBuySell is by far one of the biggest leaders in the space. They have at any given time approximately 40,000 listings of businesses for sale. And I left this blank. You see the little black bar here because I didn't want anybody to read ahead. I just want you to think for a second. How many of those businesses listed for sale do we think, those of you on the call listening now, do you think actually successfully ended in a transaction as a result of the site? So I'll let you think about it for a second. There it is. Out of the 40,000 listed in any given month, there was 2,090 transactions that occurred, I believe this was last year, on bizbuysell.com as a direct result of the site. So what happened to the other 38,000? Why did they not sell? Or you know, why is it that there's such a huge discrepancy between the number of people trying to sell and the number of deals getting done?
Well, Jeff, it's in my mind, it's actually pretty simple. They're not following the process. They don't follow up. It's anecdotal. It's done in a way that they want to know what they feel the value of the company is before they actually get the company ready for sale. So what happens is you're looking at macro issues. They come up with a value, whether it's an internet value or they come up with some valuation, then they put their company online and then they're hoping to sell it. And as buyers are contacting or calling them, it's real simple. They're not ready. They don't have the business ready to be sold.
So simply put, they advertise their business too early.
Yeah.
You know, they go, okay, I'm thinking about exiting. I want to retire. So I'm gonna create a listing on bizbuysell.com and advertise my business for sale, and then see if there's any takers. Right? They're just feeling the waters.
Yeah. I mean,
and then even in a best case scenario where a buyer comes along and says, hey, I'm interested in buying, you quickly realize that because they've done things out of order, they're not in a position to actually go through that process. They're out of order, and now the buyer's going, hey, let me see your financials. Let me look under the hood. Tell me about this. Tell me about that. And they're not prepared. So the deal falls apart before it ever gets started.
Absolutely.
And then valuation is another big one. I've seen this. I've seen this a lot actually in the small business world. I know you've dealt with it all the time. Sometimes an owner's emotional value that they put on the business is different than the financial value that the market will support, that a buyer will support. And so they can have a number in their mind, but it's not always the number that comps in the marketplace. So that's another big one, is the unsubstantiated and unreasonable valuation.
Yeah. In other words, it's they have expectations that are unreasonable. Well, how do you get the expectations under control? Well, once the cat's out of the bag, it's out of the bag. Mm-hmm. Once you have $10 million in your mind, or $5 million, or whatever the number is, it's hard to get rid of that number. CPAs are, again, uniquely qualified, more so than anyone else, to say, Steve, listen to me. Your business is worth what, one, somebody's willing to pay it for, and two, what the risk value is once a third party buys it. Let me help you with the valuation. CPAs, again, very uniquely qualified to help with that. Even if they don't have a valuation practice within their firm and or their single practitioner, and they're not a valuation person, they know how to get that done. So it's important to establish initially what a reasonable range is. And again, CPAs are qualified to do that.
Then lack of preparation with financials. This is where I've seen more deals fall apart than just about anything, because it's what happens is we get business owners ready to sell. They're emotionally ready to sell. Then a buyer comes into the room and says, all right, I want to buy. Let me look at your financials. And they go, okay, let me get back to you on that. And then they spend 3 weeks trying to pull the documents together. And before you know it, they go back and say, okay, I finally got all my financials done. I didn't have last year's taxes completed, so I had to talk to my CPA. He needed this, he needed that. And then before you know it, it's turned into this nightmare. And the buyer has moved on. That's what happens.
Yeah. So a lot of times CPAs know what will happen is the financials will be done internally, whatever program they're using, QuickBooks or FreshBooks or Sage or whatever. They're using their internal financials to submit to the CPA to do the tax return. And what's happening is it's not being done on a quarterly basis and or even an annualized basis, and it needs to be. So if you're getting ready to sell your company, the CPAs need to notify their clients, look, if you're thinking about selling your business here in the next year or two, we need to get together and we need to do these things in advance. And that's critically important. That way you've got solid financials. And if you need a review, you get it out of the way. You need a quality earnings statement, you get it out of the way. Taking too long to respond to due diligence requests is one of the main deal killers. What happens is exactly what you said earlier. I need this. If it's 3-4 weeks, I'm thinking, look, if they don't have this stuff together, the rest of the business is going to be.
They lose faith, right?
Right.
They lose
100%.
trust in the seller. They go, look, if this guy doesn't have his house in order, if he can't give me financials within a reasonable turnaround time, I don't want to buy the company. It sounds to me, I'm starting to read between the lines and assume things are not being run properly, and I don't know what I'm getting into.
I was doing a transaction last week, and the bankers up in Portland needed financial statements. I had them to them in, I think, an hour and a half.
Yeah.
Okay, so the point is you have to be ready.
Absolutely. So then having unresolved financial or legal issues, nobody wants to get into a transaction and get surprised. So these are the types of things that if when you're sitting down with your client and they're talking about selling, ask them, be upfront, get them to tell you, hey, are there any legal issues or liabilities that we need to know about and resolve now, or get the process of getting them resolved dealt with? And then if there are, then there's a very real value in being upfront about that. Absolutely. If there's a tax liability that needs to get dealt with, just make sure it's not a surprise to the buyer, because that will kill a deal. Then lastly, undocumented business operations. And that, what I mean by that is that the business itself really exists in the owner's head. If after I dig in a little bit and look into buying a business and realize that nothing's been documented, and that as soon as the business owner leaves the property, the business has left with them. It's that nobody knows how to run the business better than they do. Why CPAs and business advisors are uniquely qualified to provide advisory? Well, number one, they have intimate knowledge of the client's business, their financials and history and business structure. They are typically the most trusted advisor to a small business. This is somebody who understands kind of the behind the scene financials that most people are hesitant to share with anybody else. So you have a very unique relationship there. And then CPAs and business advisors are accustomed to working with software as it relates to business and financial matters. So this is something that you guys can embrace much easier than a typical business owner sometimes. The other thing is that, and this is important that everybody understand, is that most business owners, when they actually go to do a deal, have the buyer lined up. And this is just, and I'm saying this as in most, here's the most common scenarios. A business owner is getting out of the business and wants to sell or transition to a family member or a business partner. And so now they know who they're selling it to. There's just a process that needs to get done, and they don't know where to start. Competitors are buying out competition. So a competitor comes, knocks on the door and says, hey, I don't know if you're willing or not, but I'd like to buy you. And they say, you know what? Let's do this thing. Now, where do we go from here? Customers sometimes are the buyer of a business. This is another common one that we see, is that they know that the owner is looking to retire and the customer steps up and says, I would be willing to take this over if you'd be willing to sell. And then the other is one of those scenarios we already touched on. This is where the business owner advertises for themselves online. Maybe they went out of order. They just ran an ad and they got lucky. So now let's talk about the steps, the actual steps involved in a transaction. This is important, and I want everybody to make sure you take note of these, and or you can also find them available on dealmaker360.com/resources. But the first one is get the business ready to be viewed inside and out. So this is the curb appeal, right, Martin?
Not only curb appeal, yes, as well as the inside. You have the financials and all the other operational documentation done and ready to go.
Consolidate and prepare all the necessary business documentation. So that's kind of the 2-in-1 there, is that, make it look good. Not just the financials, make it look good physically, paint, clean up, get the business running slick, but then get all the documentation in the back of house done as well. Valuation. This comes down to setting the expectations and making sure that there is a fair valuation placed on the business. So complete the market valuation and prepare the draft term sheet. You want to touch on that real quick about preparing the draft term sheet as step number 3?
Yeah, again, it depends on the client, of course, and the CPA is, again, uniquely qualified to say, all right, from a tax treatment perspective, this is the direction we want to go. This is how we're going to allocate the purchase price, so on and so forth.
Right. So now we can draft a company profile and find a buyer. So this really means this is when marketing occurs. This is when you start advertising the business. It's not until step number 4 that you would recommend, or that in your process, that's when you start promoting it.
Right, and I don't want the CPAs out there to think that they have to find the buyers. There's a process in which the client can do that, and the CPA can assist in providing guidance and counsel.
Certainly. So then there's the transactional document. So this is where, you've got a buyer, you've got a seller, you've put together your agreements. Documents are getting compiled and put together, and there is basically a final draft of everything that needs to be compiled.
Correct. You just all the transactional documents, and those are done by attorneys, of course, and the CPA will be one of the hinge pins, and that they're helping with that process from an advisory perspective as it relates to tax and other matters that they're going to opine on. But the transactional attorneys do typically number 5.
Got it. And then the close and the transition. And this is an important step in every transaction, is the transition, and making sure that you have a clearly defined plan on how we're going to go from, you running the business every day to a brand new, maybe a complete stranger now taking over and running the business every day. So in some cases, an owner may stay on for a period of time and consult. There's going to be a literal checklist of items that need to be completed. There are bank accounts to deal with. There are passwords that need to be exchanged. A whole variety of items, and helping them build that list, that checklist, and ensuring that this process is done smoothly can sometimes prevent clawbacks and financial impacts and lawsuits and things like that from occurring.
Well said.
So your next steps as an advisor, as a business professional that's advising to your clients, open the communication now. Start the dialogue with them and prepare for this transition. It doesn't matter if it doesn't occur for 5 years or 5 months. It's something that needs to be talked about, because one thing I will promise all of you is that every single business owner will eventually exit. At some point in time, it will happen. So have the dialogue, start the conversation, talk to your clients about their goals, their objectives. Do they want to sell to a new buyer? Do they want to leave their business to a family member? Or do we not know? Is it just kind of up in the air? We're not sure about that. We'll start developing a plan. The other thing you can do is conduct evaluation. This is what I call the blue sky. When you conduct evaluation with your client and show them what their company is worth, it really gets their wheels turning. They start to see the blue sky opportunity, and maybe they go, man, I am getting close to retirement. Maybe we do start this process and try to find a buyer.
Yeah, and Jeff, actually what also that does, once that process is started, again, CPAs don't typically use an online tool. They'll have the resources to do it internally, and or they'll find the resource to do it. But once it's done, it heads off the expectation issue, because sometimes expectations are a little greater than they need to be by the small business owner. And this way, you curb that very quickly and say, this is kind of what the professionals out there are saying your business is worth. Therefore, you can start that dialogue and that conversation about getting ready to be sold.
Right. So an example of that, we have a very basic valuation tool available on dealmaker360.com/valuation. And then also, if you want to provide the checklist of things that need to get done to prepare a business for sale, go to dealmaker360.com/resources. There is quite literally a checklist available that you can provide to your clients. Officially the end of our webinar, of our presentation here. We want to open it up for Q&A, and I want to ask everybody to hang with us an extra couple of minutes, because we do have a very unique offer to present to everyone in the next couple of minutes.
Okay, super. Any questions? If you would, please put them in the chat, or you can use the question box. I'm monitoring both, so either one is fine. All righty. Thank you, Michael, for answering the Zoom question. And again, apologies for the polling or the survey questions not working there. Okay, got one here. What is the average profit or fee per deal for a CPA, independent CPA facilitating the sale?
That would be totally dependent upon the deal, but typically if the deal is an average transaction, it takes anywhere from 36 to 40 hours of CPA work.
Okay, so
based on their billing hourly,
yeah, but based on some activities, Tad, that we've had over the last year and a half related directly to CPA's involvement in some of our projects, that's been the average. And those transactions are right down the middle. They're typical service and or retail businesses, some manufacturing, and get anywhere from 7.5 to say 15 million of revenue.
okay, super. And another one is how long does a deal usually take? And I'm assuming that means to complete, to close it.
Right. 6 months is a reasonable number. I've done deals in a weekend, and I've seen deals take 2.5 years. So, but 6 months on a small business is typical.
Okay. Oh, and here's one that I thought of actually as well. Can I charge a percentage of the deal with a minimum fee?
Depends on the state you're in, number one. And also it depends on if you're a practicing licensed CPA. I do not believe you can. But again, laws are changing all the time, and I'm not up to speed with all the CPA rules and regulations. So don't know if it's a law or if it's an ethics issue. I don't know. But I've known CPAs that have done it. And again, typically they charge their hourly fee.
Okay, super. Okay, anyone else? Any questions, thoughts, comments? And again, if you come up with something later after the webinar is over, just feel free to open up a support ticket at CPE Think, and we will get that question over to Martin and Jeff. Anybody else? It's getting close to the top of the hour, so I want to let Martin and Jeff move forward with their offer. So no other questions? Okay, back to you guys.
All right, thank you. Appreciate those questions. And of course, if anything comes up, any other questions come up, don't hesitate to reach out to us. We'd be happy to entertain the dialogue. So what I want to do next is I want to introduce everyone to Dealmaker 360 Professional Software. It is an online patent pending software technology built specifically for the CPA and business advisor. This advisory software takes the professional and client from start to finish through the entire process of selling their business. Now, this includes everything from documents and templates and the guidance and the steps and phases. Not only that, but it's also a platform that allows all parties, professionals and the buyer and the seller, to come together in one place and have full transparency in the deal. So what I want to do right now is I want to walk you through a quick scenario. This will take me about 30 seconds. And this scenario is of Fred, who wants to sell his business. and he's beginning the process, Dealmaker 360 will literally empower him to conduct evaluation, manage multiple buyers or prospects simultaneously, so he can have 5 or 6 people in the software viewing his basic financials and overview of the business and marketing page that provides a snapshot of the business profile. And then they can even submit their offers over Dealmaker 360 and give him an opportunity to evaluate several different offers, choose one to accept, and then close out other buyers and move forward with the one that he or she has chosen. It also allows them to create their agreements and get all their documentation pulled together. It will also provide a complete transition plan and transparency for buyer and seller to systematically go through the process of handing the company off. Literally, they can work through each step, and they're going to be able to see in real time what's been completed and what hasn't been completed, and ensure that it is as smooth of a transition as possible. At the end, Fred introduces the new owner to his clients and literally hands over the keys. The transition is done, and Fred has successfully completed the sale of his business and moves to Hawaii. So that is the way Dealmaker 360 is designed to work. It follows the fundamental steps that Martin has been doing for years, literally for years in this industry, and provides them on an online platform that allows all parties to have full transparency. And that is absolute key to a successful transaction, is transparency and ensuring that nothing gets lost in the minutia. So Professional Edition, you can purchase the Professional Edition which allows you to manage multiple clients simultaneously at any given time. You can bill each client for the use of the software. You can also bill your hourly rate to assist them through the process of Dealmaker 360. But it also provides you with all of the tools that you need to represent the transaction industry and provide them with the necessary documentation and basic tools that they need to start the process. And that goes back to the whole trust and ensuring that they just feel comfortable moving forward rather than liquidating their business. So Dealmaker 360 is for professionals. It allows you to be able to conduct these transactions with multiple clients simultaneously. So you have the ability to log in to more than one transaction that's occurring at any given point and assist them through the entire process. Martin, anything you want to add there?
No, not really. I mean, I think that the software, it's important for everyone that's still on board to understand the purpose and the goal and objective of designing this. Was I got very frustrated with the other party that I was not representing, not having the same process that I was working under. And therefore it required a tremendous amount of conversation, emails, dialogue meetings to keep everybody on the same page. The software is designed to get rid of that. And what I have been doing over the last year and a half is talking to CPAs and other professionals out there and deal people that are doing transactions. And what I've found remarkable is that it's not so much whether somebody's going to use the software. If you're doing a transaction, there's no reason you shouldn't be using it, because I use it. I'm using it every day, and it saves me a lot of time. And so that was the goal and objective, was to, one, provide counsel to people that don't do it on a daily basis, provide the process, and provide a real value for the client as well as the professional using the software.
I want to point something out here because I want to make sure that we're clear. The Professional Edition is not a platform designed for the CPA to go in and conduct the process on behalf of the business. The business owner will still bear the bulk majority of the work involved in getting their content into the Dealmaker 360 software. And the CPA is primarily an advisor, an overseer, walking them through advice and helping them, getting them documentation as they need it. But ultimately, it's in the seller's hands and the buyer's hands to leverage the software to help go through the necessary steps. And what you're doing is you're providing this software as a tool. And it doesn't matter if you're enormously involved or not. What you want to do, if you've got a client who is looking to transition, Dealmaker 360 is a tool. It's a resource that you can provide and suggest to say, look, if you're going to do this, you need to make sure you follow the proper steps and don't get out of order. So here's something that you can use to help you through that process. It's a tremendous added value to your firm.
Yes. Yeah.
So let's talk about getting started with Dealmaker 360, because we do have a very, very special offer that we're not making available to the general public. First is that if you go to dealmaker360.com and register with our professional edition, use coupon code CPE001. It will give you the ability to activate a full 30-day trial of all of our features for only $1. In addition to that, we have a special bonus, and actually my designer is putting the final touches on this right now as we speak, and that is the Dealmaker Playbook. This is the how-to guide on marketing transaction services to your clients, and we're giving you that absolutely for free. So this is we give you scripts on how to present transaction services to clients. We give you guidance, the checklist that we talked about. It's 35 pages of great content on how to enter into the transaction industry. And then lastly, I'm going to be conducting, and my team will be conducting, free ongoing webinar support for all of our professional clients. So as you come on board, don't think that you're just going to have to figure it out on your own. Every week we will have another webinar that will allow you to be able to come in, ask questions, go over some scenarios, and really learn how to get comfortable with guidance and the support of the software on behalf of your clients. Tad, that is it, man.
All right, super. Thank you guys very much. And just to be clear, that's all for $1, right?
That's all for $1. Yeah, absolutely.
Okay, just want to make sure. Okay.
Yeah, but there are no contracts. There are no long-term commitments. I mean, we want everybody to come in, take a look at the software, really see the value, and even have the dialogue with the client who's actively pursuing sale of their business, and get them in there using it. And you will see immediately the value that it provides, and the level of anxiety just go way out the door for your client who's looking to the process.
All right, super. Thank you very much. Really appreciate that. I did put the link for the website, dealmaker360.com, in the chat, plus the coupon, CPE001. So if anybody wants that, I will also put in there the link to the resources that you mentioned a couple of times during the webinar, which I used for the valuation piece, which I still think is really neat. And then I'm going to put our support email in there as well. Anybody has any questions after the webinar is over, please feel free to email us. Or again, you can open a ticket by clicking the chat icon, maroon chat icon in the lower right of any page. Again, give it about 15 to 30 minutes on your My Courses page for the Take Exam link and icons to be there to take the 1-question final exam to get your certificate of completion. If you don't see it for whatever reason, just open a ticket and we'll get it right to you. Any other questions? Does anybody have anything about the webinar, the content during the webinar, or the actual offer itself, the Dealmaker 360 software? Can Dealmaker software be used for any type of business being sold?
Yes.
So no restrictions on, you said that a few times, but just want to make sure of that. Let's see. Ongoing training. Will there be ongoing training on the use of the software?
Yes.
Okay.
Absolutely. And there's also ongoing support. So on a one-on-one basis, if anybody has a question or a need, they can reach out to our support team, and we will actually conduct live webinar training one-on-one, but we'll also have our weekly support webinars in place.
Okay, here, Sam, I like Sam. He asks the same question I always ask when I buy something. Are there any additional fees for the deals that are completed?
No, absolutely not. No, Tad, real quick, I know we don't have a lot of time, but I want everybody to understand that, I've done several hundred pro bono deals. The goal and objective of the software is to get it out to everybody So people are not selling or liquidating their business improperly. I'm trying to help as many people as I can before I retire, and I'm hoping to do that through this software. And CPAs, as I said, yeah, attorneys absolutely could use it, other brokers and such, but it's the CPA that I really want to get this information to.
Super. Okay. Thank you very much. Okay. Any other questions? Looks like that was the last one. Okay. We did go a little bit over. We do thank everybody for hanging in for this, and Martin and Jeff for presenting and putting all this together. Again, if you have any questions, just let us know at service@cpethink.com or the chat bubble in the lower right of any page. Any final thoughts, Martin and Jeff?
No, appreciate the time, Tad, and thank you very much for your help. And I hope everybody learned a little bit about transactional work and how they can benefit their clients in the future. I really believe that it's 10,000 baby boomers are retiring every year. There's a real opportunity out there to help.
Well, I want to thank you too, Martin, just for, if nothing else, you gave me an idea how much my firm's worth. I never knew that before. I keep saying it, but it was really nice.
Yeah, well, make sure that you get with your CPA and double check that valuation, all right?
Absolutely. We'll do that for sure. Okay. Again, any other questions, let us know. Again, thank you, Martin and Jeff. Thanks, everybody, for attending today, and we will see you next time. Have a great week. Bye.
Bye-bye.